In a world obsessed with speed, stealth, and sniffing out the best platform for any trade at any given millisecond, customers are going towards brokers with a strong electronic presence. Sometimes they are independent. Some are internal ones, such as at Deutsche, Goldman, and Credit Suisse. Bloomberg Markets magazine ranked the best equities brokers from last year, and that prices that the firms quote for clients relative to a benchmark, size of the order, price at which the broker executed, all part of the calculation. So here's a look at the results. Our next guest company made the top 3 in North America, top 5 worldwide. Seth Merrin is the founder and CEO of Liquidnet. In the simplest terms, he runs a matching system, a private network used by dozens of mutual funds and other institutional investors. He's joining me right here in the newsroom. Seth, glad to see you.
Nice to be here.
Smaller spreads, higher volume, all of these trends are forcing exchanges, or at least giving them the motivation to consolidate. Most recently, we know the NYSE is going to be purchased by Germany's Deutsche Börse. How much more consolidation are we going to see in the exchanges sector? What is this going to do to your market share?
Well, this is a natural evolution in a space that has traditionally been dominated by monopolies. Competition comes in. You can see the incumbent exchanges losing market share, pricing power, and margin. So what they're doing is they're consolidating to diversify their revenue stream, specifically away from cash equities, and to gain scale. What it does for the institutional investor is, if you take a look at the Deutsche New York Stock Exchange merger, the cash equities business represents less than 20% of their combined revenue, and the institutional percentage is a small percentage of that. So it falls further and further away from the focus of the large exchanges.
We know one of the biggest motivations for them, the New York Stock Exchange, to do that deal was, as you mentioned, to get away from cash equities, to get a little bit more presence in derivatives. I guess because you have just a little bit more generous spread still in some of these derivative spreads, and the margins are better. So 600 mutual funds, other investment shops are part of your network, Seth, at Liquidnet. They want to swap stocks away from the hubbub of exchanges. In some ways, they just want to protect their identity, right? The size of the trade, the price at which they want to execute. How much is this worth to your clients?
Well, it's become sort of the Wild West out there, and the exchanges themselves have never really been good at serving the institutional client. What the institutions really need, and the reason why we place so highly in the rankings, is because we created an institutional venue specifically for institutions where it's safe and it's efficient for them to trade, away from all the competing interests that they find outside in the marketplace. And that's the only way you can consistently get better performance.
So we know you execute block trades. As you keep driving this point home quite rightly, you're doing business for institutions. What about the cries out there that tend to be concerned about electronic trading and say it leaves the little guy out?
Well, who's the little guy? The little guy are the folks that invest in those mutual funds, that put their money into the pension funds. And the more it costs these institutions to trade, the bigger the taxes on all of our returns for everyone who invests their money with those institutions. They need a separate venue. It's no different from every other industry out there. You have a wholesale and you have a retail. And what we've built is a global institutional wholesale market.
Speaking of global institutional wholesale, you need some pretty strong algorithms, some pretty strong computers to be doing this. We've been tracking Watson versus Jeopardy champs, Watson versus Congress. What is the right mix of man and machine as far as trading goes?
Well, we've seen the automation levels in the trading world consistently increase, and it's rapidly increasing. So it's an arms race right now between the different computers, and the human touch is becoming less and less.
Can you have, though, an excellent trading system without some old-fashioned kind of experience from a human?
Well, not just yet. We don't have Watson on the trading desk, right? So until we do, we're going to still need some human element and judgment, certainly.
All right, Seth, before we let you go, I have to ask you, we know Liquidnet was thinking about an IPO, 2008, canceled because of the crisis. Business looks good. Is this going to be your year?
We're very bullish about the equity space. We think that lots of inflows are going to come in this year. We will constantly evaluate it throughout the year, next year, and when the timing is right, we'll do it.
All right. Seth Merrin, thanks very much.
Thank you.
Seth joining us, founder and CEO of Liquidnet.